Good morning. I'm Chris Fogg, and I lead investor relations for Perpetua Resources. Perpetua Resources is focused on advancing our 100% owned stibnite gold project located in central Idaho. Our headquarters is in Boise, and we trade on the NASDAQ and the Toronto Stock Exchange. Our cautionary language can be seen on slides 2 and 3. Why Perpetua Resources? Our vision is to develop one of the highest grade open pit gold mines in the US. Provide the country with a critical mineral, which is important as a byproduct of the gold operation, and this critical mineral is vital for national security and the clean energy transition, and to restore an abandoned brownfield site. We have strong community and political support, and recently announced the completed final record of decision for the project. This is a significant milestone that comes after 8 years of detailed, rigorous analysis and review, which ultimately made our plans stronger. Looking ahead, we expect to complete all final permits in the first half of this year as we move towards construction. Given the strategic importance of our project as the only domestic reserve of antimony, we have been fortunate to receive combined grants of approximately $75 million to study antimony from our site, permit, and advance construction readiness. We also received a letter of interest from the U.S. Export-Import Bank of the United States for up to $1.8 billion in project debt financing. And we are in the process of completing the full application as we continue to evaluate all financing opportunities for the mine. One of the many reasons that we are so unique is that we'll take an area that's been abandoned after about 100 years of mining activity, and we'll use responsible mining techniques to restore the environment and develop a truly modern mining project. So gold drives the economics at stibnite, making the site restoration and the antimony possible. And it's easy to see why. With 4.8 million ounces of reserves, the stibnite project has one of the largest gold reserves in the United States not owned by a major producer. In total, we have 6 million ounces of M&I resources with an additional 1.2 million ounces of inferred resources. And not shown on this slide are the 148 million pounds of antimony proven and probable reserves. We have one of the highest average gold grades in terms of open pit mines, and a 15-year mine life. Head grade is expected to average about 1.4 grams per ton over the 15-year mine life, and 2.2 grams per ton over the first 4 years of production. We'll produce about 300,000 ounces of gold per year on average over the mine life, and in the early years, over 460,000 ounces per year, which would make our project the second largest gold producer in the country outside of the Nevada Gold Mines joint venture. Stibnite will be powered by one of the lowest carbon emissions grid in the nation. We'll have a low strip ratio given the historical mining activity at site, and we have that valuable byproduct in antimony, which at today's prices would give us a much higher byproduct credit than we assumed in our feasibility study of $70 per ounce, assuming $3.50 per pound antimony. If you do the math, and anyone knows where antimony prices are today, you know that that is likely substantially higher. So these are the key drivers of our low cost base and why we believe that this project will be so competitive on a unit cost basis. The project has significant leverage to higher gold prices, as you can see on this chart here. But most importantly, will also be resilient in a lower gold price environment given the low cost drivers that I mentioned. However, despite all of our achievements, we continue to trade at a discount to the project's net present value. Unlocking value at stibnite means restoring the site. Our project's restoration and mitigation plans provide early action, as well as concurrent restoration and reclamation for any new disturbances. Our design will ultimately improve water quality, restore passage for fish that has been blocked for decades, and clean up legacy tailings and waste sites. Now turning to our valuable and strategic byproduct, antimony. Antimony has been identified as one of 50 critical minerals in the US, It's included on lists in Canada, Europe, Australia, and others. Antimony is essential for national defense, technology, and energy applications. It's a primer in hundreds of munitions types. It's in circuit boards, solar panels. And globally, China and Russia dominate the mine supply of antimony, and China controls most of the processing. Perpetua offers a domestic solution supported by the strong economics of the gold. In fact, our project alone could supply about 35% of annual U.S. demand for antimony over the first 6 years of production. In December, we announced agreements with Sunshine Silver and U.S. Antimony to continue studying processing options for our antimony concentrate. To date, we've received about approximately $75 million in grants through the U.S. Department of Defense to study antimony from our site, to continue permitting, and to advance construction readiness. Earlier this month, the Forest Service issued the final record of decision for the project, the pinnacle of 8 years of thorough review, detailed analysis, and feedback gathering. In April of last year, 2024, we received a letter of interest from the U.S. Export-Import Bank for a loan up to $1.8 billion. And we anticipate submitting our complete application soon for that process. So what we're seeing here is a whole-of-government approach to support a more robust industrial base, and we're excited to be a part of it. So where do we go from here? We expect to have all other permits, the ancillary permits, complete in the first half of this year, along with project financing, which I mentioned. And assuming we have all that complete, we could start construction this year. It's a 3-year construction period, and that would put us in production in 2028 based on the current timeline. I've mentioned a number of our achievements already, but I'd also just like to highlight that we welcome John Cherry as our new CEO in March of 2024 as we prepare for the next phase of growth for the company. We've also engaged advisors to support the EXIM loan application and project financing more generally. In August of 2024, China announced export bans on antimony products. In December, additional controls followed and were announced based on, interestingly, economic and national security reasons, which I think further highlights the need for a domestic source and a Western source of antimony as we move forward. So looking ahead, as I mentioned, we expect to have all permits and financing lined up in the first half of this year before construction begins. Despite all of our recent achievements and near-term catalysts, we continue to be undervalued relative to our peer group. It's no secret that permitted and financed projects trade at a premium, and we continue our valuation to continue to improve as we move forward. So summing it all up, Perpetua Resources is unique because we bring solutions. We have a large, low-cost, high-grade open-pit gold mine. We'll offer the only domestically mined source of the critical mineral antimony, and we'll use mine development to fund restoration at an abandoned mine site. Thank you very much. I wanted to leave just a minute or so for questions, if there are any. Yes. Yeah, so the question was on processing for antimony, and I'll just flip forward to our flow sheet. So in terms of how to think about the flow sheet, it's very similar to a copper flotation circuit. So what we'll do is we'll float the antimony off first, make an antimony concentrate to be sold into the global market. A portion of that could be put aside, the higher grade, lower impurity material to be shipped to defense contractors. And then the pyrite concentrate or the gold concentrate will go through a pressure oxidation circuit and conventional CIL. Does that answer your question? So the question was on project financing, and specifically if we get the $1.8 billion loan, what does that leave for the any remaining financing? So the question ultimately rests on what the updated cost will be to build the project. Our last feasibility study was complete in 2020. We're updating the costs as we speak, not changing the mine plan, but just simply updating operating and capital costs. So the EXIM loan should be able to cover a substantial portion of that based on the information that we have today. there should be, based on that, a small gap that we'll have to fill either through raising equity ourselves. We also hired RBC Capital Markets as an advisor last year to look at other options outside of the debt financing piece. So we're evaluating all options from going it alone, potentially issuing equity, considering JV partnerships, and any sort of mix of financing opportunities that are out there. Thank you. Thank you.